Okay, so let's go this again. How many of you guys understand ICOs? One. This guy. So you guys you guys should get married. Do you understand ICOs? Or we have to leave?
I know a bit about them.
Okay, and you're okay with them?
Yeah, I'm okay with them, yeah.
Okay, so we're going to explain this. This is how you can make millions of dollars in 35 seconds and then get arrested, right? That's basically what the situation is, right?
Come on, anywhere there was a Wild West at the beginning.
Okay.
So there is a new technology. I mean, we have to somehow start with blockchain. So there is a new technology that is absolutely phenomenal. I'm talking about blockchain. There was something amazing invented. I'm talking about Bitcoin. I'm not talking what Bitcoin is today, and I'm not talking that I'm bullish on Bitcoin, but the whole idea of applying blockchain to such to cryptocurrency and to have an independent social interactions to trade with that, and it is independent of any third parties, it is something really amazing.
I mean, I think it's philosophically exciting, but I think it would be interesting to hear in practical terms what a token sale is. Do you want to describe a little bit what you know, how you would want to describe it?
Yeah, so I think that the focus on ICOs and these headlines and these hundreds of millions of dollars, of course, you know, it's in the age of clicks and attention attraction, you know, it's something that's really catching everyone's imagination, but I think what's more important, it's what's underneath. And I don't know if ICOs, I think that ICOs in the current form probably will not survive, they will evolve. But what will survive is the tokens. And tokens as a native mechanism of monetizing networks and letting everyone to participate in these network effects. Like we live in the age of networks. However, historically, only a small group of people could financially participate in the network effects. Like if you were an early investor in Facebook, you know, you had 1000x returns on your money. That was financing the Silicon Valley. All these people after IPO were putting money into new startups. And right now we have the same thing happening with gains from Bitcoin and Ether and other tokens. There was a huge surge in price, and now this money is being reinvested. And of course, with many ICOs, there is a problem, and there is also an incentive problem. If you can put up a website, put a ticker on it, and says like, you know, please hurry up because we're closing soon. So we're applying techniques from online marketing, you know, selling diet pills on the internet, to selling financial products. And I think in many ways that's not sustainable. However, the general idea is very powerful and it's here to stay.
So at its core, and this is my explanation, this is what I always give, a token sale in this specific case is essentially the idea of a company saying to the world, we have a product, we have a token that is going to be used within our product. That if in some cases you're going to have a car token, and as you go down the street, I'm going to pay another car a little bit extra to get in front of it. So that token is used as a utility inside this closed system. And in theory, all these tokens get more expensive as time goes by and get more as demand goes higher, right? How close are we to actually having a car token or having an advertising token or having something where computers are paying computers without our knowledge?
You know, the way we look at it at user feeds is that the basic invention of tokens is the ability to represent scarcity on the internet. Historically, internet was all about, you know, digitization is about abundance. Everything can be copied infinitely. However, and that's what gave rise to the internet, you know, zero marginal cost of distribution of information, et cetera, et cetera. However, the world we live in is finite. You know, the capital is finite, the space on the earth is finite, and our attention is finite. So at user feeds, we want to use this concept of digital scarcity embedded in these tokens and apply it to advertising. not only advertising, basically attention allocation on the internet. Who should be higher up in some type of a ranking, whether that's search results, whether that's advertising, because our attention is inherently scarce, and it only gets scarcer. So I think there are already applications of tokens like that, and there are many projects who are trying to leverage them in many useful ways. But of course, because of the speculative component, which is, and I think it's very important to drive liquidity, to drive, again, attention and like content marketing. The price volatility is a natural content marketing for these networks. You know, sometimes maybe the focus is on the wrong things, in my view.
May I ask a question?
Sure.
So, Maciej, what do you think? The real products with tokens that are ready and working, they will be around in few months or few years? What is the time scale?
I think the real product, and it doesn't look like it is here because everybody thinks it's going to appear sometime in the future. I think the real product is already here. Like the ability to coordinate people from all over the world, regardless of national boundaries, around common economic goal, on the same protocol, and make them perform economic and sometimes even physical actions, because there is a piece of code on the internet, that's groundbreaking. That's going to change everything. Imagine with Bitcoin, like there was a white paper that was published, a piece of open source code, and suddenly people all over the world are plugging their computers, burning electricity, trading, basically coordinating themselves economically around a shared goal. And I think regardless of whether Bitcoin is going to make it or not, the fundamental idea of creating these incentive networks is going to stay, and it's going to change the world.
I think, so this is important. I want to ask you a question in a second, Piotr. So I think one of the important aspects of what you just said is that, yes, absolutely, it took bankers 50 years to get to where we are right now, which isn't that great. I mean, a Visa, you swipe your Visa card anywhere in the world, you can buy whatever you want. You still have fraud, you still have associated garbage, and you can still get all your information stolen by Equifax. So it's not the best system in the world. It took them 50 years, almost 100 years, let's say. And then it took a bunch of nerds 10 years to recreate that entire system from scratch with cryptographically secure identities and full audit trail, which is just fascinating, which is, I think, is exactly what you're trying to say here. Piotr, you were around when the internet was still run with dinosaurs. I think they used to put the dinosaurs and they would run. Is this similar to that experience?
I mean,
that exciting?
There are two amazing similarities with late 90s and with times when internet was born. The first one is, some time ago in 90s, World Wide Web was created. So internet, as we know it, was founded, was created at that time. And it was this window of opportunity. So some business models became possible. So it was a time when people understood that there is a huge economic impact or business impact of internet as a technology. It is very same with blockchain today, and in particular this use case of applying it to marketplaces, to networks. So it is one thing. And then the second similarity is that the whole process got out of hand. So there was no real evaluations of the assets because, I mean, there was a bubble. So it was clear that the revolution is huge. But because it was happening so fast, there was no mechanisms to evaluate assets. And because of that, the bubble started. So there was too much demand than supply of good projects, and the bubble started. And it is exactly the same today. So the ICO's valuations are crazy it is clearly a bubble. So this, I'm not talking about Bitcoin because it is, or Ethereum or Ether prices, but specifically about ICOs. So there is, in my opinion, there is no way that these companies will deliver such value as the amount of money that is is invested in these companies. But similarly as it was in 90s, out of these billions of dollars that were invested in companies at that time, big companies were created. So Amazon is from this era. Google is a very interesting case. It was a small startup that probably would not get money, that would not get funding if the sentiment at that time was as it was. I mean, they started to create something that was already existing products. I mean, there were search engines, and they were talking about a crazy, maybe a bit better algorithms and about a crazy business model. So similarly today, out of all these ICOs, I believe that there will be a couple of unicorns, a couple of great companies. Why? Because the technology is allowing for new business models, and somebody will benefit out of it.
So very quickly, before I want to get to some of these questions, which current ICOs you should invest in? You should invest in yours, right? Just get it.
We're not doing an ICO.
Well, when you do, right?
When we do, maybe sometime in the future. Like, we're considering other mechanisms of token distributions. We're gonna have tokens at some point.
That's an interesting point as well. You're not even doing an ICO. You're basically figuring.
Yeah, like we're exploring other ways of kind of raising the initial capital, but there are very interesting approaches. Initial Bitcoin approach was that there is a token, but it's distributed to the network through mining. So you reward people who provide value to the network. And we're thinking about similar approaches. So there is a token, but we want to separate the fundraising component from the token distribution component. What ICOs fundamentally do, they combine the two, and everything happens at one point in time in the beginning. We want to spread it out over time and separate initial fundraising from the token distribution.
So maybe we'll just make a Piotr coin right now, and we'll just
maybe we could. It's very easy.
Or John coin. Or actually impact coin.
Impact coin.
Perfect.
There you go.
So everybody who would participate.
This is an interesting question. So look at this last question. This is a question that probably for you, Piotr. What kind of language, what kind of story do these new people have to tell, especially in Poland, especially when it deals with finance? You had to deal with a whole different set of experiences, because you had to create an online experience in Poland at a time when it didn't exist, and you had to deal with all sorts of regulations that were probably popping up that weren't expected, right?
I would give two examples. One is Estonia, the other is Germany. So in Germany, the regulators are really observing what is going on, and they want, and probably the legal regulations in Germany are probably one of the best in the world, much better than the US approach. And much more advanced than most of the countries in Europe. So they, I mean, the BaFin, the German financial regulators, and the government, they know that technology is changing something, and they know that there is some, there must be regulations, and they want to be up to date. Recently, there is a startup Neufund in Berlin, and actually we participated in their raise of capital. And I talked with them about this relationship with the regulators, because it is clearly one of the important risk factors. And it is amazing how open these regulators are. The second example is Estonia. And I mean, it is, as we all know, it is amazing things are happening. So I don't have any recommendations to the Polish government. There is no one somehow golden rule what to do to be up to date, but to understand that the regulations have to be up to date with technology. It is the fundamental element. And there is a huge opportunity ahead of Europe because of the US approach I mean, regulators probably will kill the market for some time. So it's the couple of comments on this question.
What's more likely, that Bitcoin and cryptocurrencies go to zero, or that they go to $50,000, let's say? What's more likely, given everything that we know?
You know, I always avoid speculating on stage, but I think it's more likely it's 50,000 than zero. Like, once the feedback loop kicks in, and it really kicked in, and we can see it, and this bubble, it's the same pattern that repeated itself many times over already before. It's just now that the absolute prices are so high that it catches people's imagination because it's $10,000. But relatively the size of an increase, it has happened before, and it can go on. These bubbles can go like booms and busts. But during the boom can be bigger than anyone expects. So it's very hard to tell. But I'd rather say 50 than zero. 50,000.
I mean, there is no rational answer to this question. It is the matter of faith. Either you believe that or you believe the other. And by the way, if there are enough people who believe that it will be 50,000, then the pure faith can make it happen.
Was the internet an object of pure faith, or was it an an object of science?
It was completely different. Internet brought. I mean, we are talking about Bitcoin because blockchain will definitely bring amazing value to the businesses, to the shareholders, to customers. But blockchain, the technology, Bitcoin is completely different. It is an asset that is purely virtual. So this metaphor most popular among Bitcoin holders is that it is similar to gold. So it is not the practical use of Bitcoin is important, but the fact that there is enough people who believe that it is valuable, and it is independent of anybody. So there are these two things. Internet was completely different. So suddenly the way of communication appeared that was unknown before. So yeah.
All right. Hopefully this explained a little bit. Was this helpful, guys? Yes? Okay. Give these guys a round of applause. Piotr, thank you. Maciej, thank you.